Let's look at today's topic, one that is currently very confusing for me because there's so many things happening in this regard, but a very important subject matter that we need to tackle and look at, which is the really volatile oil prices that we are seeing currently, not just in the continent, but everywhere else in the world, as we've seen a lot of challenges. Oil rose for a fourth session in a row yesterday, lifted by the prospect that top exporter Saudi Arabia will push OPEC, which is the Organization of the Petroleum Exporting Countries, and maybe Russia to cut supply towards the end of this year. OPEC, led by Saudi Arabia, is pushing for the group and its partners to reduce output by 1 million to 1.4 million barrels per day to prevent a buildup of unused fuel. And it said that despite yesterday's gains, Brent is almost 25% below early October's 2018 peak of $86, as evidence of slowing demand has materialized and output from the United States, Russia and Saudi Arabia hit historic highs. We know also that just earlier in the month the Trump administration announced sanctions against Iran. We know that they want to actually look at the issue of oil exports, and we know the contestations that Donald Trump has been having with OPEC. So we're going to try to contextualize this and also look at the African context of what's happening with the oil and gas price on the continent. Well, to assist us on this very big subject matter, we're joined on the line by Lukman Otunuga, who's a research analyst. Let me just start with you, Lukman, in terms of the unpredictability that we're seeing right now, especially when it comes to the insistence of Donald Trump saying that OPEC is actually ripping the rest of the world. He's made statements such as that, and we know also that even the sanctions have created a huge contestation within the oil industry. What are your thoughts around the current space that we find ourselves currently, Lukman?
Thank you very much for having me here today, Benjamin. It's a pleasure. So when we're looking at oil prices, especially the price action, we can see that the oil has been unquestionably bearish in the past 2 months due to ongoing supply and demand side concerns. Rising global supply and worrying signs of slowing demand growth remain the key players behind oil's woes. So although we do have a lot of confusion or volatility created by Trump, I think looking deeper into the matter, the reason why oil prices are trading where they're trading right now is simply because, number one, supply side factors in the form of rising global production. The fact that U.S. shale production has soared by almost 25% to a record of 11.7 million barrels a day, which is above both Russia and Saudi Arabia that have fueled oversupply concerns. And when we're looking at the demand side of the equation, we have to keep in mind that ongoing trade tensions remain a significant threat to global growth. Now, if we have a situation where global growth is impacted and falls, this could negatively impact demand for crude. So these are the two reasons why oil is trading where they're trading right now.
Lukman, let's come back to that international dynamic of Donald Trump, and there have been many contradictions since the sanctions, and as I highlighted before the break, the U.S. actually decided to grant waivers to some of Iran's oil customers. How does that actually complicate the situation, and how does that actually make things also more unpredictable in the space that we find ourselves in?
Well, if we look closely at the oil price movement, we can actually see that oil prices started to decline following the news that Donald Trump has actually granted waivers to eight exporters. To answer your question, these waivers have actually reduced the impact of the Iran sanctions. Hence, that's why we're seeing oil prices trading where they're trading. Moving forward, the sentiment pendulum is clearly swinging in favor for bears, and it does complicate the matters even further. My conclusion to the outlook for oil is the underlying fundamentals point to weaker oil prices in the coming months.
Well, let's look at also the debate in terms of supply and demand, Lukman. OPEC, which has been led by Saudi Arabia, has been pushing for the group and partners to reduce output by 1 million to 1.4 million barrels per day to prevent a buildup. What are your thoughts around that discussion and its impact in terms of that output issue?
Well, this could be looked at in many dimensions. Firstly, there is a lot of speculation over OPEC possibly cutting supply by 1 to 1.4 million barrels per day when they meet on the 6th of December. But I think it's also important to keep in mind that Russia has already made it clear that it does not think a cut may be necessary. So based on this, it's open to question if a cut will actually materialize when they meet in December. If such becomes reality and OPEC do move forward to cutting production by 1 to 1.4 million, this could end up pushing oil prices higher. However, I think we should also keep in mind that a sharp spike in oil prices could impact energy demand, especially those for developing nations that have suffered to an appreciating dollar. And moving forward, even if oil prices do end up edging higher near the end of the year, when we look at the supply side dynamics and the fact that U.S. shale production remains at such robust levels and global growth fears have impacted or have raised fears of oil demand falling, I still keep to what I was saying earlier about how the short to medium term outlook for oil points to further downside.
Lukman, what are your thoughts on that issue of seeing the U.S. and Russia intervention versus the OPEC as a body? How do you think that changes things in terms of the market?
As we can see, the rise in production from especially Russia and U.S. shale has taken some power over OPEC. So this is what we were discussing about earlier. Even though OPEC has made it known to want to cut production in an effort to push prices higher, if Russia says no and if U.S. shale continues to pump production incessantly, oil prices are likely to remain at depressed levels.
And I want us to make speculations right now, Lukman, in terms of looking at the future of oil production. Do you see it going anywhere? Do you think this particular political situation sets a precedence for a future outlook?
So, to answer your question, I think we have to keep in mind that the fact of the matter when we're looking at oil remains that global inventories are back on the rise while global supply is simply outstripping demand. So while production continues to rise in U.S. shale, production continues to rise, even if we do have a situation where OPEC decide to cut production, we still have output from Russia and U.S. shale. So the outlook for oil, is like I'm going back to what I was saying previously, is as long as the oversupply dynamics or concerns over oversupply becoming a major theme, continue to haunt investor attraction, and demand side factors in the form of slowing global growth and potentially a drop in demand growth from developing nations remain present. Right now, looking at oil, it will be very difficult to see oil rebounding back to levels, back to the 65, 70 regions.